Good morning, everybody. This is Free the Trade. I'm the host, DK305007. Today we're going to be going over the market, doing some live trade analysis. Don't know if we're going to be placing a trade, but we'll find out soon here at Free the Trade. Thanks for joining us, everybody. All right. Thank you, everybody, for your patience with us. Feels like it's been a long time since we've had one of these, and yeah, I'm really excited about today. The market's been kind of crazy. We've had a lot of different things going on, and so yeah, I'm excited to be catching up with everybody, and then also being able to catch up with the market. Like normal, we're going to jump in. We're going to look at the Fear and Greed Index, which, by the way, has jumped quite a bit since we last had one of these streams. I think it was trading around like 15 or something. It's now up at 21. So we can see there's a shift in sentiment already coming. People are going from extreme fear up to fear, which, if you take a look at the SPY, the ETF, and you can see the drop and such, it's a really good thing that the sentiment is starting to shift. We've been expecting a turnaround and a bit of a market correction for a while now, and I think we're starting to at least see the beginning of it, so super excited about that. Nothing's really jumping out. This is new. The junk bond demand is going back up. That's good news. The volatility on VIX is going down, which is, it says neutral, and it's funny because I was about to say this is kind of a neutral thing anyways, because with options, volatility makes for better profits as far as larger swings and higher chance of profitability on an option trade. But at the same time, volatility increases the sentiment of fear, so also cause downward swings. And so this coming back down towards the 20 is actually, it's good, but it's bad. Less volatility, less profitability, but more consistency with direction, or trend direction, I guess. Still a lot of put options going down. This actually might be something to consider. If people are still buying a lot of puts, you could profit off of that with put credit spreads, where you're selling those puts to people. Good morning. Good morning. And yeah, something to consider. The premiums might still be really high for put options. You can see kind of the sentiment shift here. SPY is heading back up towards 125-day moving average. We expect it to have a little bit of resistance here. Could take a while before it gets through. Let's see. Each of these little bumps here is about 1 to 2 months. So yeah, we could see this bump here lasting through April before it gets back up to. But credit spread is so confusing for me. Well, is it just when the price doesn't go above our spread? Okay. Yeah, let's talk about this. Okay. Basic call or basic options, single legs, that's calls and puts, right? In calls, we hope the stock goes up. In puts, we hope the stock goes down. So with a credit spread, we are on the opposite end of the trade. And so because we're on the opposite end of the trade, we're not buying them, we're selling them. We want the opposite to happen. So if we're doing a put credit spread, we want the stock to go up. And if we're doing a call credit spread, we want the stock to go down. Let me see if I can give you an illustration. Let's say you had a 2010 Nissan Altima car. You bought it. It's 2010. You walk in, you buy it new from the dealership, right? All right. You drive that for a couple years, and as soon as you drive it off the lot, it starts to depreciate. And you drive it for a couple years, and then you go back to the dealership to get a new car. And what they're going to do is they're going to buy it back from you, but they're not going to pay the same amount as you paid. They're going to give you, I don't know, maybe what, $10,000, $6,000 or something, when you might have paid $30,000 for that car. So what you want to do is put yourself in the dealer's shoes, and we're selling a put credit spread. That's our car. We're selling that, and what we're hoping is that the price goes down in value and it depreciates over time so that we can buy it back at a discount and close the trade. And our profit is going to be the difference between the original $30,000 sticker price of that car and then what we can buy it back for, a couple years down the road, or in this case before the expiration date. So does that help kind of clarify the put credit spreads? We'll see. If not, we can do okay, we can do some further explanation a little bit later. All right, Fed set to lay down a marker on Trump tariffs. Interesting. There's Mr. Powell here. So it looks like it is a Fed week, isn't it? I didn't realize that. All right, so Wednesday, it's going to be volatile. Right. I have no idea what Wednesday is going to be like, but this is different than naked calls. We don't need to own 100 shares. No, you don't need to own 100 shares, and the reason why is because we buy back a cheaper. So we're selling a put, and normally if you sell a naked put or sell a naked call, you have to have some type of collateral to prevent the trade from going against you and you losing everything. And so if you sell a put, you need to have cash to buy 100 shares. If you sell a call, you need to have 100 shares to cover that trade if it goes sour. When it comes to the credit spreads, you are doing that. You're kind of doing it artificially though. So instead of having 100 shares, if you're selling if you're selling a call credit spread, you have another call option that you bought, which you can exchange. So it's kind of like holding 100 shares since it's worth 100 shares. So it's like a little bit of a cheat or a loophole. Same with the put credit spread. If you're selling a put credit spread and you don't have enough cash to cover that, instead of it being a naked put credit spread, you cover that by buying another put. And so it limits your profit a little bit, and you can calculate your profit by taking the difference in both of those, the bought put and the sold put. So you always want to sell higher than your buy, and that's going to be your profit amount, is the difference in those two prices. Yeah, hope that helps clarify that a little bit. All right, back to this Fed. I don't know how this is going to affect the market. It's going to be one to watch for sure. I don't know. Could be positive, could be negative, could do nothing. It really just depends on what happens here. Okay, looks like they're releasing something about futures falling here. It's jump in and look at SPY in particular. 562.81. All right. Look at the futures too. Yeah, futures were falling this morning. They'll have a bit of a downward trend. SPY also fell a tad bit, but I mean, pretty good from what it was. This little bit here. What in the world is this hole right here? That's after hours. Interesting stuff. I mean, can we really be got our eyes on any stocks heading into market open, or just going to see which direction it goes at open? Hey, Tyler, generally we're going to be analyzing SPY before the market and up to market open. A lot of times we'll trade the indexes, which is SPY or the S&P 500, the Russell, and then the NASDAQ, which is the Qs or QQQ is the ETF we trade. And then Russell, of course, is the IWM. So I always recommend starting off by looking at the indexes. They're a lot more consistent, less volatility. And yeah, market has to be green because it's St. Patrick Day. Good luck with puts. That's funny. But yeah, I always recommend researching the market at open, because it gives you a good idea of what all the underlying tickers are going to do. So if you want to trade a normal stock, like a growth stock or maybe even like a blue chip, and not trade SPY, that's totally fine. But it's still a good idea to know where the general market is going and consider that when making those trades. So we'll probably stick to the indexes just for the stream though. But yeah, feel free to ask about any particular tickers you guys want to know more about. We pull them up and we do some live research, and we have a lot of fun out here. All right. See, yeah, that's 2 days ago. Interesting. All right. Not a ton in the news, other than the Fed information. So 562.81, still hovering around that level. Not great, but it's okay. Let's jump into the actual charts here. Okay. This brings up, people keep saying QQQ is better alternative. Yeah, the NASDAQ or QQQ tracks, let's see, it tracks it tracks the NASDAQ, which are the tech sector. And so things like Nvidia, Microsoft, all the big tech stocks, that's what is in the QQQ or the NASDAQ. And so actually, let's pull this up and we can look exactly what's in the NASDAQ, or at least in the QQQ index. All right. It has Apple, Nvidia, Microsoft, Amazon, Broadcom, Meta, Costco, Tesla, Netflix, and Alphabet. And so I would say, yeah, it's a little bit cheaper than SPY. It's a really good alternative. The one thing to consider about QQQ over SPY, though, is it's going to have bigger price swings, a little bit more volatility, which can be a good thing. If things are low volatility, it might be better to trade QQQ than SPY. If you really want volatility, though, the Russell, which is the small cap stocks or the really, really little penny stocks or something like that. And then IWM, or the Russell, Russell 2000 is going to have that. And all three of these indexes are going to basically follow each other. So if one's up, the others are generally going to be up. And if not, they will correct back to each other. So either the two that are up are going to come down and meet the one that's down, or the one that's down is going to correct up and meet the other two that are up. So a lot of times you can catch a nice trade if you find one of these that is not trading the same. Still learning, but what I do is look if RSI is overbought and place puts. Any flaws with that? Thanks. Undefeated, that is a decent, very simple strategy. But there is some things to consider with that. A lot of times, if you just use the RSI indicator, you could fall into a trap where maybe they win a huge contract, like I'm talking $1 billion contract, and it increases their valuation, and maybe you haven't seen that news, and so you see it looks overbought, but there's actually a reason that it's overbought, and so you buy puts, and then all of a sudden your puts expire worthless because they actually, who knows, discovered a cure for cancer, created a new technology. So yeah, that there is some danger to doing that. If you go to freethetrade, freethetrade.com, see site, and let's see. All right, this one right here. This article is called "A Comprehensive Guide to the RSI Indicator." I'm actually going to put it in the Discord. Yeah, a comprehensive guide to the RSI 14 indicator. It has a ton of information about how it's calculated, all kinds of different things to consider. I'm going to put this in the chat too. I would say take a look at that, because it also talks about the dangers of just relying on right here. So false entries, lagging indicator, best used in combination with other technical indicators for fundamental analysis. What's really neat is with the Free the Trade website, you can look for, I think it's technical indicators. Yeah. And there is an entire there's several different articles about different indicators. The MACD, here's one about just general indicators. Let's see. Trading setups, moving averages and momentum. MACD, RSI 14, simple moving averages with golden cross and death crosses. This is basically the indicators I use the majority of the time. And I think it also talks about Bollinger Bands. Yeah, this one right here. Do the Bollinger Bands. How to use them. I'm going to post this one as well. Hopefully this will give you some information into using technical indicators, because the RSI 14 is a really, really great indicator, but if you only use that one, there's chances for some missed profit or some riskier trades. So all right, what else we have? Okay, yeah, so let's go back to Robinhood Legend. I am transferring all my cash from Robinhood just because last week I had a phone call that I had to take. Ended up taking that phone call. It took me away from my computer for like 3 hours or 4 hours. And I got back and we almost blew the entire account because we weren't there to watch it, and Robinhood doesn't allow stop losses. So that's a really sad thing. This was the $30 option account, so I'm not too worried about it, but we had turned $30 into $1,000 in what was it, like 2 months or less? Yeah, about 2 months exactly. Hit $1,000, Now it's sitting about $200 for full transparency. I did post that in the chat when it happened, when I got back to my computer and realized, oh snaps. And then Thursday I was sick. We also, our internet was down. We had a lot of wildfires and the wind was knocking power line poles and stuff, and so we were without internet for all the way until Sunday morning at like 3 a.m. So I didn't even know if we were going to be able to do this stream today, but we were able to. So long story short is we are kind of not prepared for today. I don't know if we'll be able to place a trade. And so what I'm going to do is I'm going to open it up for questions. We'll talk and we'll look through some optional trades. I do have a $10 option account that we can switch, or not an option account, a $10 investing account that I'm doing for someone else. I'm going to see if we can switch to that one and get the Robinhood Legend. If not, what we can do is actually go to a different one. Let's see, we'll go and pull up a different chart and a different portfolio. Let me see what we can do here. And then I can also go into what brokerage I'll probably be using for the $30 option account going forward, and maybe even show you some of the features there, because it's actually a much better. Oh, I can place a trade with $200. I can. It's just that I can place a trade. It's just that I have switched the cash over to a different brokerage and it's still in the middle of that transaction. It hasn't hit yet, so let me see what we can do here. All right. We can use this platform. I think this is by Interactive. Who is this? Actually, I don't even know. Okay, so yeah, y'all can't see my account information anyways. Cool. That's actually really helpful. What do we have? S&P 500. Okay. So this is a different brokerage account. This one has about, I think this one has 25,000 or something in it. We can do some day trading with just some simple things. I can't do options on this account, just normal penny stocks or trading shares. So we could potentially do that. See, Daniel says, what trade would you do today, a put or a call? I mean, looking at the opening, we're already up quite a bit. I might do a call here. And even as I say that, we're dancing around the highs on the order levels here. Alrighty. So this one, let's see. You guys can see this either. Can't see this. Okay. I've got a screener up here. I'm just looking at what's trading, what's moving today. Stock exchange. So we can do this. I don't know. What do you guys want to do? You guys want to trade shares, or do you guys want to look at Forex today? Since we can't really do the options trading, I can maybe show some of the Forex trading. Let's do a vote. Let's do a vote. If you want to see Forex, type Forex in the chat. If you guys want to, or futures, I'm sorry. If you want to do futures, type futures in the chat. If you want to do stocks, type in stocks in the chat. What's Forex? Forex is trading like currency pairs. I kind of want to show you guys that. It's because that's fun. It's really fast, but it's really fun. That's probably even more exciting than options trading, to be honest. But we haven't got there yet, and so I don't want to confuse people by showing them whole nother type of trading that they aren't used to yet. Stocks. Okay, it looks like a lot of people wanting stocks so far. Roll for lower. Okay. All right. This back down here. Don't know where this is going to. Okay. All right. This is another account. So this right here is Forex. So this is a currency pair, USDC and GBP, which is like the euro or Great Britain pound, I think is what that stands for. Or you could do like, I'm sorry, here's USDC in the euro, Bitcoin in the US dollar. These are basically currency pairs. So you have an exchange rate, right? Or you have basically when you're trading currency pairs, you have $1, which is the price of $1, and then you have €1, which is the price of €1. But what you don't realize is that the exchange rate and the fluctuation in the value of those two can vary. And so what you can do is say, if the euro drops like 2 points one day and the dollar has a higher value, you can buy the euro, and then when that value comes back up, you will actually be able to sell it, similar to like trading a stock. And so that's what Forex is, and just a really, really simple breakdown of it. Futures, that is what we talk about in the morning sometimes when they say stuff like, hey, futures are down today, or have you guys looked at the NQ? This is the NQ, which is the NASDAQ that the QQQ ETF tracks. And this is really fast, high-speed trading. This is a lot of where the algo trading comes in, algorithmic trading, where they run a program to place high-speed trades. This program is called Tradevate. I subscribe to data here so that I can trade futures. I don't really show this on stream just because it gets complicated quick. But we will dive into this later on if people want to. But for now on, the answer is stocks, and so I think we're going to stick with stocks today. But if you look for SPY, this is the S&P 500. SPY, yeah, market's open. I forgot to tell everybody, welcome to the market. SPY would actually be like the ESH 5. So this is kind of SPY. You can see it's trading at $5,662. If we go back to our other one, that should translate over to about $562, since that one's 5,000. So let's do that since we're going to trade stocks today. All right, boom. All right, here's SPY that we know and love, the normal one. What's going on here? Okay. I don't know what's going on with these indicators. They don't look like they're working properly. All right. All right. Here's SPY on the 5-minute. Let's see. 110 to 5 days. Let's look at the 1 day. Okay. All right. So first of all, we've got some highs here. 565.10. We're nearing our weekly high. Got a couple levels of support here. It looks like our first support's going to be around 560, almost exactly. And you can see that because we've got 4 general candles stacking there at the bottom on 560. Because of that, what you could do is open up put credit spreads at 560 right now. That would give you some upside. Problem is, it might come back down, and you kind of want to see if it's going to hit and bounce back off that 560 or if it's going to fall through. So another safer way would be to look at this yellow line, which is I believe it's the SMA 21. I've got these backwards. Hang on. Generally, I like my SMA 9 to be yellow and my SMA 21 to be the blue color. So, oops, that's too dark. All right. Maybe even a little brighter. Same color. All right. And so we've pushed through at, let's see, 314. Okay, so we pushed through. It's in a bit of a golden cross. This is a bit of a recovery period. We're on the 30 minutes, 5 days, or for the week. So we're looking like we've got a pretty strong recovery going on here. We're in a buy cycle. We just left this sell cycle off right here. At the cross, we started a buy cycle. We're still in it. It has gotten closer here over the weekend, but it's now opening back up and widening a little bit with this first candle. Let's take a look at the 5-minute. Not a ton of data down here, so let's actually open this up. All right, now we have some more data here. To zoom out, come on. All right. We are in a buy cycle, pretty strong. We are topping out at the top of the RSI. That's something to consider. Let's see, we had a golden cross back on Friday, it looks like. We're still in that buy period. We're still, I mean, we're going up quite a bit. We're at 565.85 already. That's a 3-point increase from this morning, about to be 4. Looks like it's a strong bullish trend. We take a look here at the volume, buy volume, but it is decreasing. There was a large red candle here, but I don't see anything too concerning about that. Go to the 5 days here. Check in on the... All right. On the 1-minute chart, we had a short dip here at open. I mean, right at open. Crossed back into a buy signal. This buy cycle started. Strong upward momentum. Still quite a bit of bullish movement here. We're jumping off of the 200 SMA from Friday. I mean, this is really strong momentum upwards, guys. I know we've been talking about a correction coming for a while in the Discord. We even did the math and figured that it would hover around between 565 and 575. I think the lowest it fell was down to 558 or something, or 57. I say that, but I think the low was actually, I think it hit 552 one day, like very quickly, and then bounced back up. So, I mean, this is what we got: low of 562, high of 566 so far. We're trading in between these bars. 561, good. Couple different things we could try. You could do a call outside of, or I'm sorry, a call credit spread outside of this, or you could wait for it to go down to the low and do one outside of the SMA 200, since we're trading off of that. Maybe like a 561 and 560, or a 560 and 559 put credit spread. That would give you some room. Up here, we're heading into our sell cycle. I mean, it's just normal. Actually, now that it's heading into here, I might actually sell a couple and just let you guys watch that. Let's see what we got. We'll do strong green signal here. We'll watch that until that candle confirms, and then we'll place our trade, potentially. All right, another candle. We're hitting our all-time high. We broke our all-time high at 566.18, and we're pushing it up a little more. And I was going to place a trade here. I'm going to wait now and just see what happens. And right now, I am trading shares, single shares. I am not trading options right now. On this account, I'm trading shares. So, all right, a little bit drop from the all-time high. And we have a candle that's heavily weighted at the bottom. This can sometimes be called a graveyard doji. I mean, it's got more volume than normal. Breaking up. Can you guys hear me now? Are we doing better now? All right, I think we'll assume that we're doing okay now. Hopefully we are. If not, let me know in the chat if we're still having problems with the audio. All right, we reached a new high, 566.29. Let's watch this. Our volume is still decreasing a little bit. This right here is called a firefly candle. We want to watch how it ends, though, before making a trade based off of that candle. Still cutting out. Interesting. Cutting in and out. Hello, hello, check, 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 test 1, 2. Check, 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 test. Is this any better? Is this any better? Hello, hello. Tyler Webb says he can hear me fine. All right. Okay. Maybe we can change some of this. All right, we've got a little bit of a correction coming. At this point, since we're going into a bit of a correction, I want to take a look at my 5-minute and see what's going on. We haven't hit correction territory yet here. Thank you, Alan. It'll work for half the sentence and then go silent. I understand you're trading stocks, but do you think I could do a put when you enter your trade? If I short the stock, then you could do a put. Right now, we are heading into a slight correction. So what you could do is like a market order right there. I just sold 5 shares. And so what we're doing is we're waiting for this correction period. It's easier when you're selling and buying straight shares. I can now buy those back here. And I just made $1.15. So that was just a really short stock trade, 5 shares of SPY. Not a ton of money we made, but we sold it at the top. We bought it back at the bottom. We could have kept it open for a little bit longer. In fact, we could still open it up again probably and make some. I'll open another limit order. And it's not going to fill. Looks like it's pushed past, so I might sell a market one. Boom. Now we're over it. And there we go. We're filled, I believe. And we're up $1.30. And as we go into this sell-off cycle, what I'm doing is I'm selling it first, and then I'll buy it back later. And this is kind of similar to buying a put. You can buy a put and then buy it back in like 5 minutes you would make a lot more than $1.75, $1.85 where we're sitting at. But it's costing me about $3,000 to buy these five shares to short sell them like it is. I'm up $2 now. That'd be $3 for the day. And now we're heading into a death cross correction with the SMA, where the 21 goes through the SMA 9 in a downward direction. Our candles look pretty strong in a downward trend. We're now up $3.15, and I said that, and it's gonna bounce. All right, a little bit of a firefly candle is forming. That means that we're nearing the bottom. Target price point for credit spreads on SPY. Initially this morning, it would be about 561, just based on these lows here. Let me focus on this trade real fast because I don't want to lose money. All right, I'm down 20 cents. We're gonna watch this carefully. All right, we're gonna get out of here. We're just gonna end that trade. I lost a few cents there. Not a big deal. We sold here, we sold here and bought here. We just lost a couple cents, made a couple dollars on those trades though. It looked like the all right, I'm buying back in at the perfectly wrong time. But it looked like the what was I gonna say? I don't know. I forgot what I was going to say. Oh, the SMA 200. So on the weekly high and the weekly low, generally we will look at those to place our trades. So we've got some strong support down here around 562. We could go a little bit lower to that 561, which conversely is also our SMA 200 support, dynamic support level. So might be a good idea to place those levels for the put credit spreads there. If you're doing the call credit spread, because we're in an upward trend, I wouldn't recommend the call credit spreads today because we've been hitting new highs several times already. We hit a new high, then we hit a new high already. Looks like we're going for another new high. Currently up $3.70. We bought low again on this candle. And we're going into a buy cycle, so really might be a good time to buy calls, not really a good time to buy puts or to sell calls. And we have a little bit of lackadaisical volume, kind of going to sell out here. Boom. We just made the trade from this candle all the way up to this. We made probably between maybe $4 or so, $3 something. I actually wasn't watching it. Let's see. Our orders, 317, 853. So yeah, we would have made $2.70 after all the fees. So not wonderful. Just kind of fooling around a little bit here. We're down 20 cents because our fees ate up $4.50. So that's another thing to consider too. When you do use other brokerages and brokerage accounts, your fees are going to eat up a lot of your profits, and so you need to let your profits run further. So if we're being honest, trading on the 1 minute on this is not a great idea. We should probably trade on like the 5 minute, where you look for a setup on the 5 minute or like the 15 minute and trade a longer time period so that you can collect more of those profits. What's our target price point for credit spreads on SPY? I think I've already answered that. So we'll just wait. Let's take a look at IWM or the Qs. The Qs are going to be a whole lot more volatile. So it could be that I see a larger price swing in the ups and downs. We just crossed into a golden cycle. We're about to hit a buy cycle. Our golden cross here. The buy cycle is starting. You could buy in here. So let's see. We'll just buy the ask. And we're going to do a little bit of a longer trade, I think, on this. And I only bought 1 share of that. That was not very smart. Let's see. Let's buy 9 shares of it. Hopefully those get filled. There they are. They just got filled. Boom. All right. So we've got a trade open for about $5,000. 10 shares of the Qs right now. And we're just going to sit back and hold them. And just see what happens. A little bit of a downward candle here. This is a bearish candle, but I think I'm going to hold it for a little bit longer. And just watch and see what happens. Okay. We're getting a little bit of a deeper cycle here. Okay. Now it's going, it might be. Let's go to SPY for a second here. The biggest thing is, if you see something out of the ordinary, this is in a little bit of a downtrend here. If you see something out of the ordinary here, it's always good to make sure you have some type of news up so that you can check. Oh, where am I looking? So that you can check and make sure breaking news doesn't destroy your trade. Let me see here. I've got another platform I have a news feed set up in. I'm going to go back to Qs. Boom. All right. I think we're good here for now. We're down $3, but that's okay. This is a longer trade. And here's our position. It's QQQ. We are long, or we've bought shares, hoping that they go up. The fee for our trade is $1.50. We're currently down $3.90 or so. Not a lot. I'm not really too concerned about it. We are trading a little bit longer time frame. We're hoping to see this turn around shortly because we are coming to an end of a sell-off cycle. Hopefully we make a regain of the new high, or at least a push back up to the old high. And yeah, we'll see. We're gonna watch the charts on this one. All right, and as I was saying, you guys can't see this, I don't think. You know what would be really cool is if the Robinhood funds had switched over to this other brokerage and we could do the options trading. I don't know if it has. We're going to find out shortly. Okay. Anytime now. Okay. All right, at this point, we're trading pretty sideways, heavily sideways here. I could potentially cut this loss before it gets further down. I think I am going to do that here. So I'll just cut it out. I'm not really worried about it. Did I only trade one? Hang on. Still have 9 open. Yeah. I thought I had this set to 10. Alright. So we're out of our trade now. Okay. So no open positions. It was trading sideways, not really a great setup. If we look at the longer term, it's kind of sideways, so definitely don't want to be holding long positions as we go into a sell-off cycle on the 5-minute here. I really wish we could do some options trading today. I enjoy doing that with you guys. It's a lot of fun, and we get a lot of bigger profits. But unfortunately, we haven't had that availability yet. So bear with me 1 second here. Trying to pull up a news feed. All right. How can we do this? Give us 1 second, guys. I'm switching over to a different brokerage account here. And don't want to dox myself. Okay, I think we're okay. All right. So this is Tasty Trade. What do we got going on? I was right. Porcupine. They made some money on a call, it looks like. All right. Looks like he made 80 bucks. Good stuff, man. Great play. All right. So here we are. Here's the cues. Over here on our right side, we've got a news feed. And really, it's not much going on in the news feed. Let's hop over to SPY and see if there's anything on SPY. Okay. Really not much going on here either. But it's good to have a news feed, either, you know, notifications on your phone, scrolling headlines like this, or, you know, to pull open a browser window and have the breaking news, a tab with breaking news open, just so that you don't get caught off guard by some type of announcement. I was looking at QQQ and saw a large price swing, and it looked a little bit out of the normal for what we were trading at, the trend and stuff. And so I've exited my positions, and I'm looking for news as to what happened. I'm not really seeing anything yet. So, and what you guys can't see is I have a browser window pulled open. I'm just looking through the news here and watching the tickers there. Yeah, I'm not seeing anything on that. Let's see, traditional. Heading back over here. Here's our normal setup for Robinhood Legend. Not really seeing any news anywhere. Refresh this and check the sentiment again. Sentiment is still the same at 21. Here's a new update 30 minutes ago, but I don't think it would have too much effect on us right now. Looks to be just like an analysis article, not anything breaking, so I don't know. I wonder if one of the big Magnificent 7 stocks, I wonder if one of them had a drop or something, because that would affect the QQQ quite a bit more than like SPY or IWM. Let's see, what are we looking here? News. Edge higher. I do want to look at this. It's an interesting article here, which we already saw the sentiment shift. We looked at the fear and greed index, and we've already been feeling that shift, even though it did hit the 10%, which is I believe, let me see, is that a correction or I don't think it's a recession. We'll Google it. That's just a correction, I'm pretty sure. Yeah, so a correction is a Wall Street term for a decline of 10%. So really, unless SPY comes down 10%, we haven't even seen a correction, much less a recession. We can't hop into here. We don't have. We do, but not on this account. Okay. So yeah, it's about 9% down. It barely flickered into the 10% level, so it barely is even corrected. And everyone's been freaking out about the stock market crashing. Oh, we're going into a Great Depression. It's another recession. Where we're at right now, like we haven't even hit correction levels other than just for one little second, one brief moment. And so if you're out there and you're worried about the stock market, I wouldn't be. I mean, we're doing fine. We're doing perfectly fine. We were top heavy and we needed a correction. I mean, we've barely even seen a correction though, so it's healthy for it to go down sometimes. It's not healthy if it stays up all the time. I don't know why this is on the 30-minute. Let's take it down to the 1 minute. And this is, I know I made comments about this before, but this is what I love about Robinhood. Like the charts and the it's just very pretty. It's very beautiful. Like it's great. I love it. The problem that I have with Robinhood though is that it doesn't have the ability to purchase real-time data. It doesn't have the ability to use like stop limits. I mean, it's just not a great platform for options traders. It's really good for stock traders or long-term holding of stocks. Really good for that. Not great for options. There we go. There's our normal setup here. Looks like we're going into, or we're heading into another buy period soon. As soon as we finish off this sell period. We're sitting about a 45 RSI. Generally, whenever we're in the middle, around 50, that's where it should be. But because investor sentiment, fear and greed, it goes back and forth. And so usually overbought is about 70, and we can anticipate a sell cycle coming. And under or oversold is about the 30 RSI period. And we can anticipate another rally. So trading right in the middle. So not really a good time to place or make a trade right now. I apologize again, guys. It is a boring day today. Because we're in the middle of a transfer from Robinhood to Tasty Trade, which actually, if we go back to, I think it's this. Yes, this is Tasty Trade, and this is the platform that we'll be using. Going forward, I think we'll be using this platform. Just because you can do bracket orders. It's a really, really nice looking interface. I mean, decently nice. And let's see. Give me 1 second here. What am I looking for? I'm still learning my way around it. I haven't used it a ton. I've had an account with them for a while. I have 2 accounts with them. This is a new one we are opening for the $30 option challenge though. Oh, this is a really cool feature of Tasty Trade too. I'll show you guys this. This is super cool. So this is their back testing feature. You can choose a symbol. You can give it a time frame, and then you can say, you can put your strategy in, you can program your strategy in and see how it would have performed over the last few years, the last month. Let's say we did credit calls. Well, let's do put credit spreads, where we sell a big put. We can choose our delta. Maybe we can do like a, let's see, a 16 delta, and then like let's do a 5. That's fine. We do it every single trading day, and then we stop loss. Let's see, let's do a profit of, 40% is probably a good one. It's a 45 DTE, and we're going to close after 21 days. All right. So this is a pretty standard trade. Basically, what's going to happen is they're going to open every single morning, 8:30 a.m. They're going to open a put credit spread for 45 days out. They're going to stay in the trade for 21 days, for 24 days. After 24 days, they're going to exit if it's at a loss, or exit if it's at a profit. They're going to exit. And if it hits 40% profit, we're going to immediately exit as well. Now, if we run a back test, we can see how this kind of trade will perform. And boom, it actually would have outperformed SPY on this. The orange is our trades. The gray is SPY. And if we had done that, it would have cost us $64,000 in total. We would have that much cash to do this strategy. We would have made $7,000 over a year and averaged about $30 per trade. We would have had one major downfall, and that would have been when it would have been of August 5th, 2024, whenever SPY crashed or had a big dip. We would have lost a lot of money. We would have been down 11,000. We still would have gained 11.36% on that, and actually looks like we would have topped out better than SPY did. So it's just a good way to test your trades, or test your strategy. And the other deal with this is, like, this is several days. This is, let's see, 1, 2, 3, 4. This is a period of several days that these losses would have occurred, and this is without management. And I recommend managing your trades. So you log into your account, you check them every day. If something's going on in the market, or you hear about something, you keep up with it, and you go in and you take those trades out. If SPY's dipping hard, you stop those trades, and then you'll sit here, and then you can restart maybe your let it drop, restart your trades. And that way you don't lose as much, and you could be even higher up on the profit and loss. You could say you cut your losses here, and instead of going negative 11,000, you actually lost 1,000. So that means your trades would be about 17,000 at that point. And then you would be like way up here while SPY's down here. So you'd be in the sky over here. So super cool feature. gives you just a decent idea of how your trades are. Tells you how many trades, the profit and loss for each individual trade. Yeah, super cool feature. I love that. And then the bracket orders. The bracket orders allow you to set your profit and your stop loss so you can walk away from your computer and take a phone call and not blow your account. Yeah, it's great. So if you're going to go to a brokerage and you're not using your phone, you should take a look at Tasty Trade if you want to trade options, because they're built for options traders. You can trade shares, and I believe they have some crypto stuff too. But really the options is kind of where they're focused. Super good stuff. I love their news headlines and things. Oh, they also have this feature. If you guys ever watch the Tasty Live or the Tasty Trade YouTube or their courses and things, they stream them live, and you can tune in from your brokerage platform, or you can even, let's see, you can even pull it up over here in a small one and see what they're doing for the day. So that's kind of neat. I have not got my Tasty Trade set up to how I like it yet. I'm still trying out a couple different configurations with the windows. Now this fixed income. They offer follow trading. They have the different staff members of Tasty Trade, or Tasty Trade, and you can follow some of their traders there and do the same trades if you want. Like Tom. Interesting. I think this is a 4-way chart. This is the option chain. Okay, this is kind of cool. I actually didn't know about this. This looks like you can do like you can trade multiple tickers at the same time. It's like this one, that was two indexes, SPY and QQQ. That's really cool. I didn't know that. That's a cool, neat feature. I'm not going to read that. Looks like you can have multiple option chains open, maybe. I don't know. I'm liking it so far. I'm going to have to spend some more time learning it all, but looks to be like a pretty strong, solid option for options trading. Alrighty. Does anyone have any questions? Anything we want to go over? Let's hear some noise in the chat. It's been quiet over there. I know we're not doing a ton of exciting stuff today, but I want to hear what you guys have to say too. All right, looks like we crossed into that buy period on the 1 minute. Still kind of trading sideways though. If we look at the 5 minute, probably going to end the buy cycle soon, maybe have a little bit of a dip into the red. Going strong on the 15 minute. Little overbought though. And I think we're seeing a little bit of a correction. I say correction. I should probably start using the term reversal because it is a reversal and not a correction. We already talked about how a correction is a 10% decline. For SPY, at least, a correction is a 10% decline. And I mean, we haven't seen that. I mean, we've barely seen that. In all of this market is crashing, the sky is falling. Articles and things you've seen, we've only barely flickered into 10%, like one time maybe. Really strong upward trend on the 1 minute. I'm assuming the investor sentiment is shifting a whole lot more because we haven't seen these runs up in a while. Previously, like last week, investor sentiment was sitting around like 15, 16, and 17. So when it's up several points from that, you know that there's going to be a change in the market. So hopefully it continues to rise. Still at a 566.36 high of the day. Still haven't hit, let's see, we're at 563 on our SMA 200 now. Or 561 on the 5 minute. You could totally do 560 put credit spreads. You could go higher. It's not as safe as going behind those natural what are they called? Support and resistance levels. And the reason being is when these correct, they're generally going to bounce off of this level here, this 200 SMA. So they'll bounce off of that and come back down, bounce. And so if you stay behind that, you're generally safe and you'll make a profit. Let's take a look at what Reddit is saying. We love Reddit. I mean, we kind of do. Let's look at Wall Street Bets. And I have a love-hate relationship with Reddit analysis. It's a lot of fun, and there's some funny stuff that you'll read on there. But is it the best research you can do? No, absolutely not. But it is kind of fun to see what everyone else is thinking. So, is VIX going to spike today? SPY is hardcore rejecting a sell-off. This guy is talking about how things are trading sideways. A lot of these are just going to be meme comments and stuff. Tesla would go to 200 within 1 week. What is Tesla at? Because Tesla should be coming down still. It's probably rallying today a little. Oh, no, it's still coming down. 241. Wow. Wow. I want to show you guys something interesting on Tesla. All right. No matter what your political affiliation is, I think there's something really, really interesting that needs to be talked about with Tesla. Okay. Here's the Tesla price. Let's see, let's look at the 1 year. Okay. Here is the Tesla price. 1 year ago, it's trading, what, 168, 170? Yeah, around that level. Doesn't even top 200 until like somewhere out here. Yeah, July. And then all of a sudden you see from barely being able to top 200, it goes up to 400 something. I think it was. What was the level? Yeah, almost $500. Okay. So this, like, I mean, I don't even know what percentage that is from that. From 200 to 400, I mean, that's more than 100%. Yeah. So Tesla had this meteoric rise in 1 year, and that's not the standard generally. Like, it shouldn't be doing this all the time. And then you take a look at this. This is some interesting stuff to look at. The EPS, which is the earnings per share, is at 2.05. And then you take a look at the PE ratio, which is 117:38. Let me explain the significance of this right here. If they have like 10 shares and their earnings are $2 a share, then their stock price should be $2 times 10, which is $20. Okay, so their earnings should be, I'm sorry, their share price should be about $20 as a fair value price on a very simple, basic level. That doesn't include future predictions or forecasts. That's what this is measuring. So 2.05, you can take it by the amount of shares. I'm not seeing it here, just glancing at it. And multiply it. You should get a PE, which is a price to earnings ratio. You should get around 20, okay? 20 to 25 is a really healthy stock. It means it's trading around its price, its fair price value. It's trading right around where it should be. It's a healthy stock. Like, for instance, we go to SPY right now and we look at the PE ratio. I bet it's going to be 25 or 26. Boom, 25.05. That's right where it should be. I mean, it should be between 20 and 25. So going back to Tesla, all right, going back to Tesla and seeing that it's at 116.87. What that tells you immediately, just with basic fundamental analysis, without even looking at the chart, is that Tesla is insanely overbought. I can't even comprehend how overbought Tesla is. It's just, wow, incredible. And what happens is there will be some hype or excitement around a stock or a ticker, and people will jump into it and they'll buy and buy and buy, and it'll hit 20, it'll go from 20, it'll hit 25, it'll hit 26, it'll hit 30, it'll hit 40 and 50. And what's happening is they're buying into the investor sentiment, the greed, and they're buying and buying and buying and buying and buying and buying and buying, and then it gets top heavy. And as it starts to come down, now you have one of two things. You either have to sell for a loss, which pushes the price down faster, or you have to bag hold. And unfortunately, the biggest victim of, and this isn't a normal pump and dump, this is more of a greedy, this is how the market works. It's very greedy and fear, and that's why we use that greed and fear, or the fear and greed index and the indicators there. But basically, too many people buy it, it pushes the price way through the roof, and then you have a normal correction. And so, yeah, I know there's some political catalysts as well, with Tesla in particular, and with I'm not even going to go there with Tesla, but really, if we look down at the basic fundamentals of the company, like, they're trading way above their value, and they're probably going to be correcting. I think we did the math a couple of days ago, and we came to the conclusion that Tesla was worth like $150 to $160 or something like that, or was it 200? I think, I don't remember. It was somewhere between $150 and $200 that Tesla was worth at fair market value. And so seeing it trading at 237 Like, we're expecting it to keep going down till it hits those fair levels. And then what we'll see is institutions, the big people, the market makers, will start buying it up, and it'll trade sideways, or maybe they'll see the shift in sentiment and they'll start buying. Retail investors, which is me and you, will start buying back into it and push it up. Then the market makers will hop out, and this cycle just continues over and over. Let's look at Nvidia. Nvidia is a big one too. Boom. Currently trading at 40, so this is double what it should be. That's why we've seen a shift down. We did the math on this one too and found that it was still pretty heavily overvalued on the stock market. We considered some of the future AI and the the data centers and stuff, and we came to the conclusion it was about it was worth about $150. So even though currently it's trading below that, I think once its new earnings come out and update, we'll see it that it should be trading around like 150. So this is actually kind of a discounted stock right now, and I actually really like Nvidia. I don't think it's worth much more than like 150, but yeah, it could be potentially a good time to buy into that. Tesla. Actually, one more point about Tesla. Earnings are coming up April 23rd, 2025. Once we have these newest earnings out, it will give us a good idea of how accurate this number is, because this number is from their last earnings. If they have a good future outlook, and they're forecasting a lot of sales, either of batteries or cars or robots or whatever, AI products, this could potentially be more accurate than what we assume right now. But for right now, it does seem that Tesla is overvalued and Nvidia is undervalued. And so just a couple of, I guess, tips to look at the PE ratio, which is the price to earnings ratio, and this right here is the earnings per share, in order to determine the value of a stock. I want to look at another stock too. Let's look at Archer. I've made money off of this trading it before. I think analysts have set its price target around 13. Currently doesn't have a PE ratio, probably because it has a negative earnings per share. So they are losing money as of their last earnings. They've got another earnings another earnings call coming up, so it will be really interesting to see how maybe they've started making money, or if maybe they have turned that EPS around, which is earnings per share. Because if they're losing $1 for every share they have out there, I mean, you can't do well as a business if you're losing money. I'm just going to say that. Another one, let's see. There was one, OPTT, I think it's called. Yeah, Ocean Power Technologies. They are also losing money. I do like this stock. I do. I think that's a good company, and they've got some interesting programs. Have been closing some contracts, but once again, they're also losing money, which is something to consider. Is this something you want to hold long term? Maybe you day trade it, which I traded it for a while, held it for a couple months actually, and traded it. I think I made like 600% returns on this. Bought it when it was at like 18 cents or something, and then sold it at like 60 something. Or actually, I think I sold some of it at $1. And you can see that would have been, let's see, within the last 6 months. Yeah, hit $1.57. But yeah, fundamental analysis can be just as important as some of the technical analysis. Technical analysis has to do with the charts, looking at historical price data, the indicators, but the fundamental analysis looks at the financials of the company, the outlook and the future forecasts of their sales, looks at their earnings, and then it looks at things like the PE ratio and the earnings per share. Super awesome Someone in our Discord is talking about Baba. I think that's Alibaba. Yeah. Okay. Take a look here. 689. They're making money. They're making money. They're trading at a PE of 21.11. Not a terrible price to earnings ratio. Is this a good stock to invest in? You know, that's up to you to make that decision. It is, I believe this is a Chinese stock. I believe they're in manufacturing and, let's see, is there an overview here? Let me look. Google Finance. I think Google Finance has an overview of each stock. Okay, sweet. Boom. Alibaba, Chinese company. It's a tech company, e-commerce, retail, internet, and technology. Consumer to consumer, business to consumer, and business to business sales service via Chinese and global marketplaces. Okay. There you go. Second company to break the US $500 billion valuation mark. 9th highest global brand valuation. Very neat. Okay, there you go. So, sounds like Alibaba is probably around to stay. They're making money. You know, it is a Chinese stock, so it could be impacted by tariffs. So, depending on where most of their revenue is, that it might not affect them. But, there you go. It's at 21.11 right now, and it has an EPS of $6.89. Looks like it's trading just as it should. Potentially could be a strong stock to invest in. Someone mentioned it hit a 52-week high. Is it an all-time high? That's kind of my next question. So let's take a look. No, it's not an all-time high. All-time high was 2020. Could it hit those levels again? Hard to say. Hard to say. Last time it was trading at this level was around 2021. How much time period do we have here? 2015. I don't know. You have to make that decision for yourself. But yeah. Anybody else have any other tickers that you want to take a look at? INTC is also doing really well. Saved me last week. INTC, is that NVIDIA? Or not NVIDIA, Intel? Yes, it is. I think. Okay. All right, here we have Intel. We have a company that's losing money. Intel does make up a large portion of computer chips, laptops, things like that. They've also worked on trying to release a graphics card to compete with NVIDIA and AMD. I think it saw some use in like data centers and stuff, but really it has not had, I don't think it was as successful as they wanted it to be, which is unfortunate. It's trading earnings per share. They're losing money again. Because of that, you can't really get a price per earnings ratio. I don't know. Some people have been buying into it. It has seen a new high on, looks like February 18th. I think this might be one of the ones that, unless there is some major new developments or a pivot. Okay, there you go. A big pivot. Plans big changes. That's what it needs in order to have an increased valuation, because right now they're losing money. So if they're losing money and they don't change something, they're going to keep losing money. But it looks like they are changing some stuff. So we read into it. Hey, what's going on? What is the actual things that they're doing? He plans to revive the chip company. That sounds good, but what is he doing? What are we changing? So they're going to cut back on middle management. So they're going to reduce some expenditures. They're going to improve performance, which means they could potentially raise prices. New products. Yeah, there you go. They lost 13.4 billion. It looks like they are not going to join the TSMC, or Taiwan Semiconductor Manufacturing. There was some rumors about that TSMC was going to buy them out and run the company, which would have been really good because TSMC is one of the largest, actually I think the largest chip manufacturer in the world. So cutting 15,000 jobs, so reducing its expenses. Here's some interesting news. Intel might have new architecture ready for an AI chip by 2027. Okay, so here we have a good outlook on the company. So currently they're losing money. All right, they're currently losing money as of their last earnings call. They are reducing expenditure by laying people off. They are trying to develop better and newer products to increase sales. But we haven't seen that work yet. And so we're kind of in this speculative period where Intel has the opportunity to take off with these changes, or it could potentially start to take off because people are speculating that, hey, Intel's going to go up, and then they could fall flat. I mean, let's be honest. The article itself said that they were kind of late to the AI game. If they fall flat on that and their product doesn't check all the boxes, people are just going to use Broadcom. People are going to use Intel, maybe even AMD, and they're not going to look to Intel for those AI data center chips. If that happens and people have bought into Intel in the hopes that the AI would save them, then you're going to see grossly overbought price on the stock price of Intel. And if they continue to lose money hand over fist, at some point they're not going to be able to stay in business, so they'll either need a government bailout, or they'll need to file for bankruptcy, or they'll need another company to swing in and save them and buy them out, like TSMC, like there have been rumors of. And so because it's kind of a speculative period, personally, I wouldn't invest in Intel long term until we see those improvements starting to hit. At that point, it would be up to you to make that decision. I would personally rather, go with the big name, NVIDIA, TSMC. Those are the ones that are gonna be doing the best here. Let's take a look at TSMC, by the way. Boom, they're making $4.90. So I think it was Intel was losing around $4 per share. They're making $4 a share. They're trading at 25. This is a perfect. I mean, this is like textbook. This is right where they should be, okay? And so, is it a good time to buy? I mean, arguably, there's not a perfect time to buy. You could buy at any time. But it looks like this is a strong. It looks like it's a strong stock. It's a strong company. It's the largest chip manufacturer in the world, and they're trading right how they need to be. Like, it's kind of like one of the duh moments, Like, why wouldn't you buy into that stock for long-term holding, unless something changes in the future? Like, they seem to be a good stock. Also, it could kind of help you diversify if you're in a lot of U.S. stocks. I can't recommend a stock for you guys, but if I could recommend one, this is one that I would have on my radar, because this is a good stock. It's a good company. All right, we're gonna close out all of these things. Let's see. Anybody else have any tickers that you want us to go over? Any other tickers? Going once, going twice. see here. I do not want to show that. Maybe we can just go through some of the other ones. These are recently viewed. Let's see. Let's look at what people are trading. The most active. I think that's probably going to be by volume. Yeah. Highest volume. Okay. I think this is a computer company. Qubits. I think they do like supercomputers and things like that. Not 100% sure. Not super familiar with it though. I think they're heavily involved in AI as well. Come on, where's like a profile maybe? Description, here we go. Quantum computing. Ocean, da 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 da. Yeah, so quantum computing. I could have sworn that they did AI as well. Maybe I was wrong. Unfortunate. Qubits. Which, if you don't know what qubits are, it's the qubits is the term. Yeah, quantum computing. Qubits is the term for the different. Oh, what's it called? You know how like a normal computer uses gigabytes and megabytes and millibytes or whatever in order to measure like data. So with quantum computing, they use qubits. I could probably use Google to figure out how to explain that better, honestly. Qubits, what are they? Okay, yeah, but basic binary bit. I think the difference in a qubit is that the binary code, all of the different zeros and ones can all change at the exact same time, whereas in like a standard binary system, they have to change individually. And so because of that, it can explore, you know, a lot of different possibilities to a problem all at the same time. So you, instead of like having one thread or whatever focused on solving a problem, it can solve, I don't know, 16 million different problems at the same time, or different variations at the same time. Okay, NVIDIA CEO said quantum computing is a decade away. Quantum computing stocks dropped 40% a couple of months ago. Interesting to note. That's some good information to consider. Let's take a look at the fundamentals. They're losing money. That's not a good thing. Companies losing money, never a good thing. If they have a future outlook, which they do, that's good, but they're competing with, say, Google, who has really been investing in the quantum computing space, or maybe some of these other big technology companies. NVIDIA, they're handling more of the chips and the data centers and stuff, but I don't know what they're doing with the. I subscribe to like the developer news from NVIDIA, and I know that they've been doing some research with quantum computing too. NVIDIA is having a conference this week on quantum computing. That's why all these quantum computing stocks are going up. They're very speculative stocks. Qubits, Rigetti, Ionic, Qubit. Yeah, I would agree with that. I would agree with that sentiment. Quantum computing is it's a future technology. We haven't harnessed it the way that we will be able to in the future. I think we are harnessing it some. We are seeing advances in the technology, but it's really not utilized like we probably will be able to in the future. And so because of that, it is a speculative growth stock to keep an eye on. But generally what we'll see is there's a lot of different small companies, and over time we'll see one or two or three clear leaders in the industry. They'll grow exponentially faster. A lot of times they'll either buy out, or other companies will go out of business, go bankrupt. They'll buy up their assets. And so you'll see like, you know, Microsoft and Apple in the computing industry, and Google and all the other little little computer companies. You don't really know the names, but they're not really around anymore, and if they are, they're very small. And so kind of what we're at is we're at the birth of a new industry. And so we don't know which of these stocks is going to take off, or which of these companies are going to be the clear industry leaders yet. Now you can make your speculations, you can make your guesses, and so it could be a strategy to invest in all of them, or maybe to sit back and wait until you start to see a leader and try to time it right there before they blow up and become the world leader in quantum computing. So as our Origanti says, though, they are kind of speculative, especially when we're looking at this one. We could probably look at the others. Qubits is losing money currently, according to their last earnings report. Let's look at this one. Quantum computing. They're losing money, but they're losing less than per share than Qubits. Then we can look at like Rigetti, RGTI. Oops. Rigetti. They're losing even more than anybody, and they have a higher price here, but they are losing money. Ionic. I don't know if I'm pronouncing that correctly. They're also losing. They're losing more than anybody. My goodness, per share. So, but I also know that these have other products and stuff out there. Okay. That's kind of where these all are. They're all losing money currently, but they're probably spending most of their money on research and development, pushing out new technologies, and growing and expanding within before scaling. So who knows? We don't know who's going to be the leader. Could be any of these. Could be Google. I tend to see Google as like a really good alternative to a lot of things, but they're like a jack of all trades kind of thing. These companies are going to be focused on a certain thing, and so they'll probably be, the masters of whatever that industry is. So like quantum computing, we'll probably see a company, and that's all they do. All their research and development goes to that. Google's just a beast, and they're able to push out things really quick and adapt. So they're always going to have like an alternative product. Is it always the best? No, but it's usually pretty good. And if it's not, they'll push it away and try new things. Google's a pretty well-run company, honestly. I like Google. Alphabet. They make $8 per share per year, or per earnings, I guess. They're trading at 20.73. Really good. See, this is another really good. The fundamentals of this stock are just really good. It's trading right where it needs to be. You really can't say too much about it. Some of these blue chips are just, they're right where they need to be, and they're just behemoths to just keep going and keep doing their thing. They have some ups and downs, but it's pretty good stocks, honestly, for long-term holding. Amazon, I haven't looked at them in a while, honestly, but they've been doing some. They're a little overbought right now, it looks like. They're not earning as much per share. But another decent stock probably is going to have a little bit of a dip. Might not, but it's trading a little above what it should be. What else? Let's see. Microsoft, we can take a look at them. I haven't looked at them in a while either. $12.40 per share, trading at 31.32. A little overbought, I'd say. But I also don't know what their future forecasts are. So once again, may or may not be. But it's pretty close. It's not 111 like Tesla. It's pretty standard, right near the 20 to 25 levels that you would see in a healthy stock. So these are the blue chips, the big companies. They've been around a long time. They're consistently profitable. You don't have to worry too much about these guys. They every once in a while one will go bankrupt or something will happen, and it'll disrupt quite a bit of stuff. But for the most part, this is what you should be investing in long term. Your 401k, if you're doing individual stocks, these big companies are generally the safe ones. Not a recommendation, by the way. I'm not a broker. I'm not a financial advisor either. Although I have considered getting my license. Or getting the what is it? Series 63 and 65 or Series 7 or something like that. Brokerage license. I have considered getting it. I might. I don't know. There's a reason these guys are the Magnificent Seven and have been like the leaders in SPY, and take up the largest. I mean, there's a reason why these are the largest companies in SPY. Let's look at Meta. Right, once again, 23.88 earnings per share, 25 price to earnings ratio. It's a decent stock, and it's trading right where it needs to be. We can look at, let's see, have we looked at Apple? I don't know that we have. Little overbought, 630. I mean, what can you say? It's still a pretty solid stock. Could potentially get a better entry on it long term. Let me think, what else? There's one that I wanted to look into earlier. I'm trying to remember what it is. Let's look at One Oak. This one is an oil and gas industry. Up and coming. Man. A profitable company that's trading there. Their all-time high, let's see, in the last year, they hit almost $120. And they're currently trading at 97 with these kind of fundamentals. I don't know about you guys, but that looks pretty under. I mean, they just bought out Magellan. I mean, or did a merger with them. It's kind of an undervalued company right there. Highly recommend this one. Super good dividends too, by the way. I think it's like $1 something per share on their dividends. I wonder if I have a dividend schedule. Okay, yeah, look at this. $1.03 per share. Yeah, almost $1 per share, and they've gone up. Like, this is a really, really, I mean, nobody's talking about this stock at all. Oil and gas, super profitable company, and they're paying out dividends that increase every single year. Like, look at this. From 2023 to 2025, it's quarterly dividends. And they're going up. They're now at $1.30 per share on a sub $100 stock. I don't know. Seems like a good buy to me. I actually bought these guys back in. Ooh, they were like $40 a share when I bought them. Let's see. I've bought them several different times. I've bought them at 25. I think I bought them back when they were like $16 a share, I want to say too. I don't know. I like this stock though. One of my, it's like a new Bluetooth. It's I say Bluetooth, blue chip. Target estimate at 109. That's not a they're expected to grow. Price target at 109. I don't know. I don't know. But yeah, that might be a good one to invest in. Super good growth. Looks like this sentiment is falling again. Could be because it's afternoon. Might have seen a little bit of a dip. Let's take a look at SPY. Yeah, we're falling back down to that 200 SMA. Potentially could put in some put credit spreads down here because it looks like it's about to rebound. Looks like we're bouncing off that 30 RSI 14. on the 1 minute. Still heading down a little bit in the 5 minutes, so probably put them out a little bit. Maybe consider 561s or 560s. When was this? Was this morning? March 17th. Yes, it was. That was also this morning. Had a low of 559. So maybe do that. Maybe do the low. Just be safe. All right, guys. Well, it is 10 a.m. It's been a super slow day, though. We placed a couple of trades on stocks, but haven't really had a ton of action going on here. Kind of been low key today, which I'm okay with if you guys are. But that being said, we will I think we're going to go ahead and call it here. Thank you for tuning in. Thank you for staying with us. I hope you have a great rest of your day. The next time that we have one of these, we should have our we should be able to place some trades. We should have our account transferred. And so yeah, we'll be doing some more exciting stuff than just speculating and talking about stocks. But that being said, thank you very much for joining us. This has been Free the Trade. And we hope you have a great rest of your day and happy trading, everyone. We'll see you next time on Free the Trade or at freethetrade.com.